HT Smartcast.
You are listening to a Mint production brought to you by HT Smartcast.
Layoffs in startups and big tech companies like Twitter and Facebook are making headlines every day. And most of these companies handing out pink slips are also giving 2 to 3 months of severance pay to affected employees. The question arises is, do you have to pay tax on this special compensation? Many of you may think, of course you don't have to. This is not regular salary or bonus. It's a compensation being given out to cover expenses for months on which you will be unemployed searching for a new job. So why should it qualify for tax? Well, the Indian income tax laws don't share the same sentiment and do tax severance pay. However, there are certain tax exemptions on such compensation, and in today's episode, I will tell you all about it. Hello and welcome back to Why Not Mint Money. I am Shipra from Mint's personal finance team. I have with me Sonu Iyer, who's a tax partner and people advisory services leader at EY India.
Hi, welcome to Why Not Mint Money, a personal finance podcast where we help you understand basic money concepts and share strategies for you to build your wealth. So let's get started on your money journey.
Hi Sonu and welcome to Why Not Mint Money.
Many thanks, Shipra. Thank you for having me over.
So, Sonu, I think a good starting point would be to understand how is severance pay defined in the income tax laws for taxation purpose.
So, interestingly, Shipra, there's no specific definition of severance pay under the Indian income tax law. However, Section 17(3) of the Income Tax Act actually alludes to something around severance in two measures. In 17(3)(1), where it says the amount of any compensation due to or received by an employee from his employer or former employer at or in connection with the termination of his employment, or the modification of terms and conditions there relating thereto. So this is one place where severance or termination of employment is talked about. Then again, within Section 17(3)(3, it says any amount due to or received, whether in lump sum or otherwise, by any employee from any person. Now they've just widened it that even if it's from some third party, before joining the employment with that person or after cessation of employment, will get captured here. So to that extent, I think severance more typically is coming in 17(3)(1.
And what does the section say? How is it supposed to be taxed?
So it basically says that if you're going to get any money, which is in by way of compensation for end of employment or termination of employment or on resignation of employment, basically is fully taxable.
Just like salary is.
It's like regular salary income.
Right. So is the word compensation used in Section 17(3), Sonu?
Yes. So the section, if I can read to you specifically, Section 17(3) of the Act, underwear, which is about profits in lieu of salary.
Right.
And I'm reading now verbatim from the law.
Right.
It says profits in lieu of salary includes the amount of any compensation due to or received by an assessee from his employer or former employer at or in connection with the termination of his employment or the modification of the terms and conditions relating thereto. So the word compensation has been used here.
Has come. Okay. So why I ask this is that I just have one, doubt in my mind, which is that severance pay is considered voluntary payment, and there is no implied obligation to pay, in the sense that there is no clause in a regular work contract of most employees in India, that they might be paid a severance pay if they were to be let go. So in that sense, it is not a revenue receipt, it is a capital receipt. So why is it taxable? Which is why I ask you, if the word compensation is used or not.
Yeah. So interesting thing about our law, and particularly as it relates to salary income, it doesn't really sort of limit itself to taxing only what is embedded or set out in the employment contract. There is a catch-all thing that any payment benefit provided by the employer to the employee or any member of his family any payment will get captured as salary. And because of, and you can very clearly see the legislative intent that they did not want this to be treated as a capital receipt. And therefore, if you look at this section that we've been talking about, section 17(3, really is capturing all one-time payments that can happen between the employer and the employee. So the idea is that even if it's not regular in the nature of salary, yet it is capturing all the benefits, which could be considered as one-time only. So if you go further into the section, you'll find if you're getting any kind of payments under a bonus or an Keyman insurance policy, all of those are considered as included.
Right. Okay, so that's about how it should typically be taxed, the severance pay. But are there any tax reliefs available on severance pay that the employee who's getting laid off can avail?
Yeah, Shipra. So under the income tax law, we can look at 3 sections which talk about some form of relief from income tax on severance pay. Now, whether any of these would be applicable in the case of an employee who's getting severance compensation, that needs to be evaluated because these are all very specific.
Okay.
Like, let me start by section 1010B. Now, this is a section that's been set out under the Income Tax Act, which is in case of an employee who qualifies as a worker. And worker is defined in terms of the Industrial Disputes Act 1947. So, worker very loosely, if I were to do, this is more like a blue collar workers. If you really wanted to go more technical, the definition that it is defined as for worker in Industrial Disputes Act means any person employed in any industry to do any manual, unskilled, skilled, technical operations, clerical or supervisory work for higher reward. Right. Now, again, this is in specifically that you're looking at it in context of a worker as is being defined under the Industrial Disputes Act, and I would say loosely interpreted to mean blue collar workers or people getting salaries below a certain amount, that's specified in the law.
Right. I think it's 10,000 per month, if I'm not wrong.
That's right.
Right. Yeah. Okay. Please continue.
So in that case, section 1010B says that if you are a employee who qualifies as a worker under the Industrial Disputes Act 1947, you can get an exemption, but this exemption is limited to the lower of 2 amounts. The first amount that you have to consider is 5 lakhs. That's the amount that they've given. And then they have said that you also make a comparison with any computation that you would do under section 25FB of the Industrial Disputes Act, which basically says, just look at 15 days of average pay for each completed year of service. Right. So if you look at in this case for a worker, you'll first compute salary basis 15 days of average pay. And there's also a separate definition of average pay that needs to be looked at. So 15 days of average pay for every completed year of service or part thereof in excess of 6 months. So if you have 10 years and 7 months, you look at 11 years really. So 15 days of average pay for each year. Right. And compare that with 5 lakhs. So whichever is the lower amount, that will be given as an exemption. Now this is one section, section 1010B, which deals with tax relief for a worker who's being dismissed in terms of what relief they can get on the compensation they may be getting from the employer. Then there is, which is more prevalent or more, you and I would have heard this more and often, would be section 1010C. Now, section 1010C is really applicable in case an employer has formulated a voluntary retirement scheme or a voluntary separation scheme as is used in the context of public sector employees. This is where the employer has formulated the scheme, wherein employer has opened it as an option to all employees who are being asked as a part of and then there are specific guidelines for this to be a tax recognized voluntary retirement scheme. In this, and we'll go into what are the guidelines for this to be, tax recognized voluntary retirement scheme. But the exemption or the benefit that the person who claims VRS, which is as per the tax guidelines, is a benefit is up to 500,000 rupees or 5 lakhs.
Right.
Now, for the employer to formulate a voluntary retirement scheme, which is recognized for this tax benefit for the employees who avail the VRS, it has to be in line with conditions that are set out in Rule 21A and Rule of the guidelines. So there is. I'll just read out.
Right.
Sorry.
So one question. You said that for people who are employed in the public sector companies, does it not apply to private companies, employees of private companies?
No, it does. What I'm saying is the second section that may be of relevance when we are looking at exemption for compensation received on separation is Section 1010C. But the Section 1010C is applicable only where an employer has floated a voluntary retirement scheme. And this voluntary retirement scheme is as per the guidelines that are prescribed under the income tax law. Okay. And these guidelines are actually set out under Rule 2BA of the income tax rules. Now, for voluntary retirement scheme, and it's also called voluntary separation scheme in case of public sector employees. This is how the legislature has defined Section 1010C, voluntary retirement scheme, and then it talks about voluntary separation scheme in case of public sector employees. But very much possible for both private companies to also have, as well as public companies to have, voluntary retirement scheme, which is effective for tax purposes.
Right.
Now, the guidelines which I referred to for the VRS or voluntary separation scheme to be tax effective and to allow employees to get a benefit of rupees 5 lakhs as exempt compensation is if those guidelines that have been specified is that it applies to an employee. The scheme should apply to an employee who has completed 10 years of service or has completed 40 years of age.
10 years of service with the same company.
Yeah.
Right.
10 years of employment and or completed 40 years of age.
Right.
So it's an either or condition. Then it says that it applies to all employees, by whatever name you call them in the organization, workers, executive of a company, except directors. So you can't apply the VRS scheme to directors of the company.
Okay.
The scheme of voluntary retirement has to result in an overall reduction in the total employee strength of the employer.
Oh, right.
Overall, it should be motivated by overall reduction plan. That, it's a window that the law is giving for an organization to plan its business and therefore reorganize. And therefore, it should result in overall reduction. And it should be that the vacancy that would be caused by this voluntary retirement or voluntary separation is not being filled up. It's not as if you let go of this person, the other person can take the same role or position.
Right.
The retiring employee of the company should also not be, replaced or should not be deployed in another company within the same management.
Right.
And the last condition here is that the amount that you get as part of this voluntary retirement or voluntary separation should not exceed 3 months' salary for each completed year of service at the time of retirement or separation in our context.
Right. Can you elaborate on the last part with maybe an example?
Yeah. So let me first read out what the provision is. The amount receivable on account of voluntary retirement or voluntary separation of the employee does not exceed the amount equivalent to 3 months' salary for each completed year of service or salary at the time of retirement, multiplied by the balance months of service left before the date of his retirement or superannuation. Now, we are not getting into, the time of retirement multiplied by balance months of service at the time of retirement on superannuation, because in our context, this is not on superannuation. We're talking about severance or people being let go in the current context. If I were to say that, basically I'm saying if someone has put in 10 years of work, then we are talking that the maximum amount that they can get exempt under a voluntary retirement scheme floated by the employer is 3 months of salary for each completed year of service. So if the service for the salary is, say, last round salary is 1 lakh per month, then this person is getting 3 lakhs into 10, 30 lakhs. But I also, Shipra, if you recall, I said the maximum amount that you can get exempt under the law is 5 lakhs, right? Yeah. So I would go through all the guidelines and then say, okay, even if this person in my example could get more, but the exemption will only be restricted to 5 lakhs.
5 lakhs. Right.
But important thing to note about 1010cc is this is something that is floated by the employer. It is the employer who has the scheme. And you can't do it for one. Like, if you're laying off one person and you say, oh please give me VRS, that's not possible.
Right.
The guidelines that we just went through, it is very specifically talking about that this is a scheme that is formulated where you are giving an option to all employees, whatever their designation, for them to retire or to resign or to separate.
Right. So one question.
So that was section, yeah.
Right. Yeah. So before we move on to other things, one question. So say a company, the employer has floated a VRS scheme, and that company is letting go of a major chunk of its workforce to downsize. So here in this case, do the employees who are being laid off, can they ask the employer to pay the severance or the compensation under the VRS to be able to get tax exemption, or is it something that only the employer will decide?
Yeah, so this is not at the option of the employee to say, okay, please give me under VRS. First, for the employer to be able to give any exemption for the payout that they would do, for them, they will have to formulate a voluntary retirement or a voluntary separation scheme, which should be in line with the guidelines that we talked about earlier.
Right.
So the answer to your question is you can't just ask. It is something that has to be, a scheme has to be formulated, it has to be in place, it should be in compliance with the guidelines. And then the employer can make the severance payment and say that this is under this voluntary retirement scheme. And to that extent, they can take the benefit of the exemption that's available up to 5 lakhs.
Right.
Okay, we talked about 2 sections so far. There's a third section which is where we can explore whether tax relief is possible. And this is in a way a logical section where it says that in a year where you're getting some lump sum payment for having been terminated from employment, that would add and possibly increase the employee's tax rate. So you may be on 20%, but because you're getting this lump sum payment, it increases your total taxable income and your tax rate goes up. For that, there is section 89, which says that what the employer can do is give, or the employer can do and the employee can avail, is take the benefit of section 89 and say that I should be taxed at the average rate of tax that I would have ordinarily paid in the last 3 years.
Right.
So then there is a way that you would compute, and there are some forms, like I think 10E is the form that the employee has to furnish to the employer.
Okay.
And also at the time of filing the return, the employee will again have to attach this form 10E to claim the benefit. Otherwise, this tax relief may not be available. But this is in a way good because it allows the employee to pay tax at an average rate of tax that would have been applicable in the preceding 3 financial years.
Right. I think it will also help reduce the TDS outgo which the employer might deduct at the outset.
Yeah, because then they will, instead of using the higher rate of tax, they'll use the average rate of tax. But Shipra, it's not so straightforward. You have to give all the data in Form 10E and for the employer to give the relief. And I think one more important distinction or to note here is if someone is getting exemption under Section 1010C, which is the voluntary retirement scheme, if you've taken the exemption under Section 1010C, then the law does not permit you to take the relief that is available under Section 89. So it's either or.
Okay, so they're mutually exclusive.
That's right.
Right. And is this something that is available to employees only once in their lifetimes, or God forbid somebody gets laid off more than once in their career, but just to be sure.
So I'm again looking at this. All of these are intended to be one-time pay, kind of reliefs, like you have it for gratuity for this also.
Right.
You would specifically say, and looking at the law, it says, provided also where relief has been allowed to an assessee under Section 89 for any assessment year in respect of any amount received or receivable on termination of a no other. So this is for the mutual exclusion of 89 and 1010C. Then it says, provided further that where exemption has been allowed to an employee under this clause for any assessment year, no exemption thereof shall be allowed to him in the relief to any other assessment. So it is definitely one time.
One time, right. Okay, so if we are to sum it up, taxability of severance pay, yeah, we can say that employees do have three options, but I mean, those are largely toothless because, one, you need to have a VRS scheme in place, which your employer has already floated. And of course, it's something that is available to you only once, in your career. I mean, to sum it up, yes, your severance pay will be taxable and it will be taxed same as salary. So you're not getting any tax relief there.
Yes, well summarized. If I can reiterate, if you're getting any compensation for separation from employment, first get it to understand that it is taxable. It will not be considered as a capital receipt. It is income that needs to be taxed. Possible relief that can be explored is Section 1010B, but that's limited to being a worker under the Industrial Disputes Act. The maximum amount that you can get exempt is, lower of 5 lakhs or any computation that will be made under Industrial Disputes Act.
Right.
Then 1010C, which is for voluntary retirement scheme, where the scheme should have been formulated by the employer, subject to the guidelines that are set out in Rule 2B for the voluntary retirement scheme to be tax effective. You can't opt or you can't ask for the employer to give you VRS. They have to formulate a scheme. And again, in VRS, the maximum relief is only 5 lakhs and it is one time. You can't take it after successive employments. If you availed it in an earlier employment where it was formulated by an employer, you won't get this benefit, even if the employer formulates the scheme and others are taking it, but you may not be able to get it if you've already availed 1010C with a former employer.
Right.
Then there is Section 89, which gives you relief in terms of the tax rate that's applicable, but you can't take both 1010C and 89 relief in the same year.
Right. Besides, the third one is not an exemption per se, but only a way to bring down your tax outgo if it has been increased by a lump sum payment.
That's right. It changes the tax rate rather than give you any exemption or relief directly from the payout being taxed.
Right. All right. Okay. I think we've covered majorly all the points, and I really hope that this is useful for our listeners. Thanks a lot for joining us today, Sonu. It was really great having you, on board today.
Many thanks, Shipra.
That brings us to the end of today's episode. If you would like to know more about this topic or make a suggestion of a personal finance topic that you would like us to cover, I can be reached at Twitter under the username of Shipra Singh Saurath and on LinkedIn at Shipra Singh. Thank you for tuning in. See you in the next episode.
This was a Mint production brought to you by HT Smartcast.
HT Smartcast.